What's up, y'all? Welcome back to the Mining Pod News Roundup on this beautiful Thanksgiving week. I hope everyone had a wonderful holiday. We are recording this on Wednesday, so we are eagerly anticipating our annual stuffing at Thanksgiving dinner or lunch. Matt, Will, how are we doing?
Good. Matt and I are in the same state, different cities, and I'm pulling a Marty Bent, I was telling you guys earlier, and recording outside to get some vitamin D. But the real reason is there's people at the place I'm staying at.
A little sun.
Gotta go outside.
And now you're back in the best time zone in the US, CST.
CST is not my fave.
I'm a CST supremacist myself.
EST or MST for the win. PST is too far out. Anyways, I took all the time up. Matt, how you doing?
I'm excellent and not as passionate about time zones, I think, as the two of you.
I didn't appreciate it until I moved to the West Coast, and then I have to get up at like 5 a.m. for meetings. But that aside, we've got a good lineup of news items for y'all this week. We've got two original reports from you boys at Blockspace Media. One on the tariff situation for Bitcoin miners and what that might mean with impending Trump tariff 2.0. Also, a scoop that Blockspace had this week about officials halting Antminers at the border. Why are they doing it? We don't know, but we're trying to find out. And lastly, new rules in Texas that require Bitcoin miners to report certain things like location and electricity data that I thought ERCOT already had, but I'm not an expert on these things, so I will leave that to the officials. And as always, we have our mining metrics update with the Matt Kimmel. And this week, we also have an ASIC market update from the fellows at Compass. So a lot to get through. We're going to try to do it a little bit quickly so that we can get in and out on this holiday week.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com. Thanks for listening to The Mining Pod. Want more? Subscribe to our main feed on Apple, Spotify, YouTube, or wherever else you get your podcasts for another weekly show on Bitcoin stocks. And check out our newsletter at miningpod.blockspace.media today.
But without further ado, Matt, I'm going to kick it over to you for a difficulty update. What are you seeing, difficulty forecaster Matt?
Difficulty is set to retarget on December 2nd. At the time of recording, that is 695 blocks into the future. What do we think is going to happen? Well, right now it's estimated to go up, become more difficult by 2.7% per mempool.space and Clark Moody's dashboard, which, you don't want to cheer for difficulty necessarily going up, right? If you're a miner, but maybe you'll take it because price has gone up by what's in this difficulty epoch about 6-ish%. Now, the price volatility is back, right? Like it feels like at least it's back. We are squarely in the bull market, hovering below 100K, but we just had a correction of over 8%. It flirted with 100K, right? It was like 99.8, and then it sunk all the way down and touched 91,000. But at the time of recording, we've now rebounded all the way back up to 96. So it is volatile. You don't necessarily know what's going to happen, but the machines cometh online. So it seems with a difficulty increase expected to come up here soon. What do you guys see? What do you guys think?
I think
we didn't do a party at 100 trillion like we said we did.
No,
we said we were going to.
I think that there's a chance that, I don't know if it'll be before or after, but there's a chance that the next update could be actually in the red, because there's this winter storm about to absolutely gobsmack the East Coast. And that might actually end up disrupting some mining operations, maybe in North Carolina, the Appalachian Mountains, maybe in East Tennessee, but a lot as well in upstate New York will probably be impacted by this. So I think that's one thing to look out for over the next few days. It should be making landfall around Thanksgiving. So we'll see how much that'll actually impact hash rate and thus difficulty. But I think that's one thing that maybe people should be looking out for.
And then just hash price in general, $60 is what I've kind of seen it at. And that's pretty good for Bitcoin miners over 2024. Now, historically, not great, but for 2024, we'll take that. We'll take that.
We will take that. It's sad that was last cycle's all-time low, basically, or just above it. It was like $55 per petahash per day.
I saw the same thing, right? Like we're basically stable around the highest points since the halving, right? Which we've talked about on this show for the last couple weeks. But I checked back in the November, December 2020 time range, and hash price was, I mean, we're talking $200 to $400 per petahash per day, right? And as Will just said, we're happy to be at 60 right now. So the times change, right?
We will take the crumbs for sure.
I will say though, Bitcoin price being crazy like this, every person I talk to who doesn't know mining is like, "Oh, things must be so good for miners right now," and I'm like, "No."
And then
it's like
sit down and sound like a crazy person. It's like, well, you have to understand that if the difficulty is too high, and then if there are people trading dick butts on chain, that changes things too. And then none of it sounds real.
Yeah. It's a complex market. Let's go to our scoop though.
Yeah.
Colin, take us away.
Yeah. So this is an interesting story. I would say fun, but it's really not, because it's causing a lot of problems for brokers and ASIC wholesalers. TLDR is that the U.S. Custom and Border Protection Agency is holding certain imports of Antminer ASICs, namely the S21 and T21 series, at the border at certain points of entry across the U.S. We heard about this happening in San Francisco, Detroit, Los Angeles, at the airports in those cities. And we were told by our sources that this is happening because the FCC, the Federal Communications Commission, which regulates these things because they are computer devices that connect to the internet and they transmit and broadcast information. So they're under the FCC's purview. The FCC apparently has been telling the CBP to hold certain shipments of Antminers. We talked to about 7, I think actually it was 8 sources by the time that we had published this. And they had all had problems of ASICs being held, some for as long as 2 months or longer. One source also had $200,000 worth of basically a bill that they had to pay to the CBP because the CBP is charging them per day for holding this equipment. Just an absurd thing considering they're the ones barring it from entry. But this is obviously causing a lot of issues for a lot of Bitcoin mining companies, both wholesalers and public miners. And I will be very curious to see how this develops. We reached out to the FCC. They said that they were not aware, a media representative said that they were not aware of a directive to this point. But that doesn't mean that there isn't an investigation, because a directive and an investigation for a federal agency are two different things. I also filed some Freedom of Information Act requests with the FCC and CBP. And I was told over the phone by a CBP representative that if there is an ongoing investigation, they can't release documents per federal law. So I'm really curious to see if those bear fruit and what we can learn for why this is happening. The speculation for why it's happening, and this is not confirmed, is that it may be related to a chip that are used in T21 and S21 control boards, or sorry, T21 control boards. They're not in the S21, but the CBP and FCC are probably just catching them in collateral damage because they don't understand the nuances of these things. But in the control boards of T21 and older S19 models, there is a chip from Softgo, which is currently under the eye of federal agencies in the US for their use of, or for their potential violation of sanctions. A Softgo chip was found in a Huawei device, and they're not formally under investigation, but they are under scrutiny right now. And TSMC has cut off relationships with them as a result. Now, importantly, one last note here, Softgo shares a CEO in McCree Zane with Bitmain. And so Bitmain co-founder McCree Zane, also CEO, the CEO of Softgo, and also co-founded the chip manufacturer. So that's kind of the straight skinny of this. Don't know if y'all have anything to add.
Yeah, I think the first thing is if you want to read this, go to blockspace.media and you can find it on there. So we publish a lot of our stories on there, and then the mining pod's under that publication. The interesting thing to me was the FCC saying, like, basically no comment. We're not going to get involved and like give you any more info. But some of our sources revealed that it was the FCC that was directing the Border Patrol to sort of stop these shipments. And that's a little telling to me that someone is lying. Someone's lying along with the trade. Either people who are feeding us information about these multiple stoppages are lying, which seems unlikely because we have 7 or 8 sources. Though they be anonymous, we have sources on sources to back up this information, or the FCC isn't just going to talk about it yet. The last thing I'll note is, like, why are they doing this? It's an outgoing administration. There's certainly going to be people shuffling. The head of the FCC is going to change. So why are they proceeding with this? There's a lot of things going on in the federal government right now as this lame duck presidency sort of closes out. And a lot of these different bureaucratic ABC organizations are doing things in the waning days of the Biden admin. I think closing up investigations, deciding to close them or like pursue them a little bit more. And I think we might see some more before January 21st when Trump comes into office.
Yeah, my condolences to the mining companies whose machines have, in some cases, now been months held when you were expected for them to be delivered and, possibly even online by now. This will surely affect the financials of some companies, let alone the fact that they're getting charged inventory holding fees on top of that. So no, you can't get your machines, but also you're going to have to pay for us to store them for you while we're blocking your access to them, right? So that's pretty brutal for the mining companies. I also just claps to you guys for your journalistic approach here, letting your sources remain anonymous, getting the scoop out, chasing after what the truth is behind the story to the FCC and the different parties involved. I honestly enjoyed this read, and we'll be interested to find out if you guys kind of figure out any more of the reason why, right? Because I don't know, the Softgo speculation is interesting. Like, that very well could be the reason, but there's so many unknown unknowns here, and we really don't have a clue yet. But what we do know is that machines are being held up for some reason. We'll find out.
Definitely a story that we're going to be keeping our eyes on. We'll have follow-up reporting as it becomes relevant. On to the next, not scoop, but Blockspace original reporting, Mining Pod newsletter for this week. Will.
Yes.
What are miners going to do about renewed tariffs under a second Trump administration?
We should just ask the author since he's on the show with us right now, but we will go back to it in a second and I will give a brief summary. So Colin put this piece together. The Trump tariffs are coming more into the spotlight right now, right? The Treasury Secretary pick was announced. The Commerce Department pick was announced last week, and the Trump administration has a tenant, or whatever the plank they call it, included that they're going to increase tariffs. They're going to slap, I believe, another 10% tariff on Chinese goods entering the U.S. There's already a tariff from the prior Trump administration that was kept with the Biden admin. And then they're going to possibly put a 25% tariff on both importations of goods from Canada and Mexico. Now, the reason for this, according to the political pundits, the Wall Street Journal, and others who have reported about this, all has to do with getting our fair share, as I would say, of goods and cost of goods, protecting our own industry. So very Hamiltonian if you are into U.S. history. And then I think the last part about this is like the fentanyl crisis, where a lot of fentanyl is coming through different borders and coming from China, and they're trying to stop that. Why does this matter for Bitcoin mining? Well, a lot of ASICs are still manufactured over there. One of our sources said that a majority of units were manufactured still in China. It's hard to know. We do know that a lot of this ASIC manufacturing was reshuffled during the last Trump administration. A lot of the units are perhaps like the parts are made in China, but then they're shipped to Malaysia and assembled in like Indonesia or Malay, something like that, and then shipped over to the US. MicroBT assembles a lot of their units in the United States directly. Canaan makes theirs outside of China. So there's ways of getting around this, but of course, there's other parts of the industry that we should be mindful of, not just ASICs. There's a really big transformer trade that went on the last few years where people were making containers and transformers within China and shipping them over to the US for cheap. And that's how quite a few Bitcoin mining startups the last few years have done well, doing that arbitrage trade with transformers. And a 10% tariff certainly eats into your profit margins. The last part I'll say about this before throwing over to Colin is we don't know if like this is actually going to happen or not. So there is like a little bit of speculation. This could just be like a big stick, not going to do anything, a threat, and then maybe they don't pursue it. But I think Bitcoin miners are wisening up to this and trying to get ahead of it at the very least. Colin?
Yeah, I think that last point is really important and bears repeating. You know, Howard Lutnick was on CNBC a while back talking about how the tariffs are basically a bargaining chip and a negotiation tactic for the Trump administration, and hand waving it a little bit and saying this is not going to be something that necessarily is put in place, and pointing out some important details like the fact that US car manufacturers are heavily tariffed in jurisdictions like Europe. So there's a lot of moral panic about this, I think, from a lot of different commentators. And Lutnick was basically making the point that, hey, this is something that other countries do. We're just trying to use the same economic levers that they have to try to make American manufacturing more competitive. And Howard Lutnick is the incoming Commerce Secretary for the Trump administration. One other thing I wanted to point out from our sources is multiple sources said that Bitmain and MicroBT are actively shopping for factory space in other countries. The US came up, countries in North America came up outside of the US. One of my sources asked me to not name specifics, but the idea being that Bitmain and MicroBT are trying to get in front of this, assuming that it does end up come to fruition. Makes sense. Obviously, it would be a win for them if they didn't have to deal with these tariffs and they could set up domestic manufacturing. They're closer to their largest market at this point, and they don't have to worry about an additional tax. It could be as much as like 35% if these 10% tariffs end up going on top of the heaviest tariffs that are currently levied. The biggest winner here, Matt, is...
The biggest winner to me is potentially Auradine and Proton as potentially new competitors in the ASIC manufacturing game that are in the US. I guess the ultimate question to me is, will a premium actually reemerge on ASIC hardware manufactured by foreign parties, particularly Bitmain MicroBT, right? And as Will noted, this is potentially skirted by assembly in the States or in kind of other regions where the tariffs aren't as high. But that's the biggest outstanding question, particularly to like the, public listed miners who have the majority of their operations in the States.
100%. Yeah. Block's Protos division and Auradine clearly, I don't want to say they're cheering about this, but it would be good for them. That being said, they still assemble their machines, I think, outside of the US, but I do think it's just easier for them to not come under scrutiny. And anything that tries to encourage American competition within the mining space is going to be a win for them.
One last thing to note here. Trump's been very outspoken about basically wanting all the mining industry in the United States. Yeah. He's also been very outspoken on tariffs, right? Probably more outspoken on tariffs. Actually, definitely more outspoken on tariffs. But I mean, these things are kind of at odds with each other potentially. So, I mean, we'll see, right? Politicians' promises, what actually comes to fruition, is always a question mark. We have a couple months here as people on a podcast to speculate about it.
Today's show is brought to you by Digital Shovel. Digital Shovel is a leading manufacturer of modular mining pods as well as PDUs and switchgears. Unlike many other competitors, their product is designed and manufactured in North America with a complete UL inspection on the entire unit. not just individual components. Additionally, Digital Shovel is one of the most vertically integrated manufacturers of over 75,000 square feet of sheet metal shop, SMT and wave solder PCB assembly, as well as final assembly all under one roof in Toronto, Canada. Their price point leads the industry when compared to products with rates as low as $69,000 per megawatt for a complete data center with smart PDUs and switchgears. To learn more, visit digitalshovel.com.
Bring up Karun from Compass. Karun is our resident hosting expert. So, Karun, welcome to stage. For those who missed you, I think last month when we had you on, basically bring on Compass every month to talk about the hosting market. Hosting market sort of operates in like this private side of the mining industry, and most of our information comes from the public market, right? It comes from people who are putting out 10Ks and all these other things. So we like to have Compass on and go through all that private side of the market. Karun, what you got for us? How you doing today?
Good. Thanks for having me on, guys. So as you can expect, with the recent upturn in Bitcoin price, definitely seeing increased demand in the hosting market. It's a good time if you're already plugged in and hashing and you're mining Bitcoin. With hash price at like the highest levels since June 2024, that's driving that demand for hosting. Even if you have like an older gen model, I think like I checked today at J Pro is the break-even hosting rate is 8.1 cents, which is very achievable even in the current hosting market if you have an MOQ of 1. So there's opportunity out there to host even for J Pros. Specifically at Compass, we're seeing a healthy demand mix of retail and institutional clients coming back, though it's still mostly institutional. And then in terms of hardware demand, most of the units that we're seeing that customers want are units with efficiency of 23 or better. So basically an S19 XP or better. So that's a good news on the demand side. It's not necessarily all good news on the supply side. So, with the recent increase in the Bitcoin price, what we've seen is the wholesale hosting market immediately respond to that. And so we've seen rates kind of jump up by about 10%, pretty much immediately, even after the election and Bitcoin started to run there. So not all good news on the supply side of things. But if you are retail, there is a little bit of good things happening in terms of what we're seeing for retail is the hosting rates are mostly flat right now. So those increases that we're seeing on the wholesale side haven't trickled down for retail. So again, if you're an MOQ1, those hosting rates, you should be able to achieve around high 7 cents or low 8 cents. In terms of the host, though, they're still less inclined to take older gen units. The focus is on these newer generation units, so things like the S21 series. Even I think last month when you guys had me on, I kind of talked a little bit about how during the bear market, one opportunity that popped up was a lot of these profit sharing deals. That there was a lot of demand for hosts to kind of enter into profit sharing agreements with their customers, and they were willing to even take older gen units such as the J Pro. That's stayed the same. We're still seeing those opportunities, but again, the lowest efficient unit that they're looking at for these profit sharing deals are the J Pros. Anything worse than that, it's hard to find capacity for right now, even with hash price running up to these high levels.
Sorry to cut you off, Karun. I just want to pluck this thread a little bit. Do you think that those J Pros will be viable over the next year? I mean, let's assume that Bitcoin continues to run through 2025. Will that be like the last window of opportunity for people to be able to place these machines, do you think, in the hosting market?
I think so. Personally, that's what I'm expecting, at least in the US, where we've kind of seen these energy rates at where they're at. That being said, I know there's a lot of talk about sending these type of older gen units overseas, whether it's South America or now in Africa, and maybe there's an opportunity for that. But for 2025, I'm personally expecting this kind of be the last run of the J Pro, and it had a good run, right?
Yeah. Famously said S9s don't die, they go to Venezuela. Perhaps maybe the S19 J Pro doesn't die, it just goes to Paraguay, right?
Exactly. Yeah. And then, just one more thing I'll talk about on the supply side is that even though, we're seeing this increase in the wholesale hosting market, the price to purchase or lease mining sites, whether that's a greenfield or an existing mining site for purchase, not really experiencing any noteworthy increase, compared to that wholesale hosting supply market. And so what's that imbalance, in terms of the price change appreciation between those two different markets that's leading to hosting companies, like ourselves, like Compass, publicly pursuing and continuing to pursue that vertical integration route, where we're owning more of the facilities and more of the mining stack, because that will just lead to higher hosting margins, right, as you kind of reduced that hosting fee.
I might be jumping ahead a little bit here, but I am curious to hear about vertical integration within the market, given that there's like a lot of M&A right now. How are some of these private smaller miners competing against the big guys, the pubcos who have these huge ATMs outstanding? Is it pricing out a lot of private miners, or is it still pretty competitive, like the cost per megawatt building a new mine, securing spots for building out future mines is still possible in the US?
Yeah, I think it's still possible. It just kind of depends on the capacity. What we're seeing with the pubcos and large cos, right? They're the ones that are going to go out and buy sites that are 100, 200 plus megawatts, right? But there's still that market for under 100 megawatts, whether that's in the 10 to 50 range or 50 to 100 range. So in that range, definitely still competitive pricing there, and able to purchase sites and turn them around pretty quickly.
Nice. Okay. I cut you off though, so feel free to continue. I was just interested in the vertical integration there.
Yeah, for sure. And a couple more things I'll make on the growth side of things in terms of the hosting market. With the recent presidential election, the expectation around the industry is more favorable for the hosting market, whether that's the taxation or the energy costs kind of reducing, and then as well as a focus on North America. So seeing a lot of miners, making these long-term plans to host in North America as opposed to outside the US or elsewhere.
Yeah, the one example you gave was Bitfarms deciding to host 10,000 units within the old Stronghold facility. That they're still
they're still finalizing the acquisition. Yeah, they're still
Yeah, it's interesting.
Yeah.
So
last thing I read there was that it was expected to happen in 2025. But what I thought was interesting about that deal was I think originally those miners were slated to be hosted in Paraguay, and now they pivoted back to North America. So is that a direct result of this recent presidential election? I don't know, but nevertheless thought it was interesting, for them to come back to North America to host those units.
And then some news on the Compass side, you guys have a new facility as well, right?
Yes, yeah. So we recently, to kind of pull on that vertical integration thread, we recently announced a purchase of a site in Iowa. So we're expecting 8 megawatts to go online here in January or February of next year. And then we have plans to expand that up to 30 megawatts as well.
I'm glad you mentioned the Iowa site, Kareem, because I have a question about favorable states for mining. Obviously, everyone always talks about Texas, but what are some states that you're seeing more favorable hosting rates or conditions for compared to some of the weaker ones? I feel like there are a lot of states that fly under the radar because people always think of Texas, but like Iowa, obviously a good example here of one that people might not think about, but could have very favorable conditions for mining.
Yeah, a couple that I'll name that come right off the bat, other than Texas, obviously, are Ohio. I think just with the energy market there, we really understand it. And so that's an area of focus specifically for Compass, but other companies as well. The other one I'd mention is Indiana. So in Indiana, we know that there are favorable tax exemption rules. So they have tax regulation there where if you are able to invest a certain amount of money in a data center and that money is guaranteed to stay for a certain amount of time, there's no sales tax. So that makes it very attractive for hosting facilities, to sell hardware there.
Matt, you got anything?
Hosting is back. I yield the rest of my time back to the pod. It's great to have you, Kareem. It's been a while.
One thing I do want to mention is I hosted some units. I've hosted with a few people, but holding those hosted units for a few years has been a pretty good strategy. So I'm not going to tell anybody how to make money, but you do, if you are interested in mining Bitcoin and hosting is kind of the way to go for you, hodling that Bitcoin for a few years, keeping a few miners in your garage or with some friends in a hosted spot can turn out to be a pretty good move a little bit later. So my first hosted units went online in June or July of 21, and 3 years later. And it's seeing the ROI on it now, but it's been a pretty nice little ROI for getting something like that.
that equivalent cost to mine 1 Bitcoin versus, price. That's kind of always the selling point of hosts. So I can definitely see that if you've been hodling since 2021.
Yeah, for sure. Karun, I'll let you finish up with anything else that you guys have on the Compass side of things, and then anything else you're seeing in the hosting market.
Yeah, I think the last thing I'll mention is I saw a news story, since the last time that we had met that I thought was pretty interesting. I feel like as hosts or as miners in general, our ears always perk up when there's other ways to generate revenue. And so one news story that kind of caught my attention, I didn't see that much about it other than one article, was basically Bitmain having a hosting agreement with Prosper. And I guess Prosper is a decentralized protocol. And so what they're doing there is Bitmain is hosting Prosper, and Bitmain will provide these hosting services to them. And in turn, Prosper is able to provide liquidity for users of its protocol. So just one, little newsworthy thing that I thought was interesting to see how mining can be leveraged, for some of these DeFi protocols.
Well, thanks for joining the show, Karun. We'll see you again here soon. Happy Turkey Day. And let's pop over to Matt for our last portion of the show. Matt, you got something on the Texas market?
A decentralized protocol for cloud mining. What could go wrong?
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale? We've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
The headline reads, crypto miners must register with the state and reveal power usage under new Texas rule. So I believe this is a bill coming to fruition that came about. It has to be. Yeah, here it goes. 2023 bill. I remember when this was first released. At first reaction of that bill, my thought was that it felt a bit targeted, a little bit biased, I think, to the industry, as they had to basically mining operators would need to report their exact electricity draw, where they were getting power from, their exact latitude and longitudes of their locations. This seems to have a threshold requirement that bill has now gone through for facilities that consume over 75 megawatts of power. And for you miners out there, the heads up, there is a fine for not reporting. If you'll scroll down for a second, Colin, if you have the power to, I believe it's 25,000. Yes, the failure to register could result in up to a $25,000 penalty per violation per day. That's even steeper than the inventory holding fine by the by one of our previous stories. It seems like, honestly, I don't find this to be as egregious, I think, as I originally felt it was when this bill was first released. ERCOT's basically recognizing that mining operators are large-scale flexible loads. And I don't necessarily think this is a deep crackdown on the industry, while, maybe it does feel like, maybe everything over 75 megawatts should have to report this, not just the miners. But because miners can basically scale up and down their power consumption as quick as anyone out there, I think ERCOT just wants to basically have real-time information where these places are, who they could contact in case the grid is strained, and probably feel this way because of the winter storm of a couple years back when they were basically caught off guard and there was massive outages. Now it seems like the demand response programs are up to date, up to snuff, and like closely tracked and followed, and really a happy marriage with the Bitcoin mining industry. So what do you guys think about this one? That's kind of my take.
I think that you hit the nail on the head with, is this just something that miners have to comply with? I believe Pierre Rochard was very vocal about it back in the day. The location data specifically, I find to be kind of concerning. It's like, why do you need to have the exact coordinates of some of these mines? That's strange to me. The other thing that I think is strange is the fact that they have to report electrical or electricity consumption data that ostensibly ERCOT already has. I mean, it's not like these companies are completely flying, or I should say, it's not like ERCOT is flying blind with these things. They should know some of this data. I wonder how much of the reporting has to deal with this Public Utility Commission. Maybe they want the data too, and they couldn't get it from ERCOT straight up. I'm not sure, but it seems to me like ERCOT would already have the consumption data, because these companies already participate in demand response programs and curtailment things, right? They have specific PPAs signed that give them the option to either sell their power back for credits, or they're mandated to turn off when there are power spikes based on the stipulations in their PPAs. So all that being said, I agree with you, Matt. Maybe this isn't the most egregious thing. I just think it's kind of weird. It seems to me like some of this data should already be within the realm of ERCOT's knowledge with a lot of these participants. So, but who knows?
Hey, government is going to check in. That's a surprise.
This is supposed to be small government area, though. This is supposed to be.
It's supposed to be a fair, open, free market down here in Texas. I flew down here for Thanksgiving, and this is the news I'm greeted with. It's not great stuff.
Freedom country.
That is kind of funny, though, right? Like, Texans were invited in by all these Republican politicians. This is an open market. Come and plug in your Bitcoin miners. And then a little bit later, they're like, hey, can you register? Yeah. And like, what's next? So
it's funny. There have been a few things like this. There was a bill that was being pushed through the Texas Senate a year or so ago that was sponsored by a bunch of politicians that are in the pockets of the oil and gas industry, specifically companies building peaker plants. And it was basically a bill that would have limited how much demand response miners could partake in. I don't think it ended up getting anywhere. But just to your point, Will, you never know what the politicians are going to do. They always have some sort of ulterior motive, typically based on some sort of entrenched special interest group that has built some sort of moat around things. But
I mean, the lieutenant governor of Texas is not a huge fan of demand response game with Bitcoin mining. He's on the record stating that. So there's definitely people who are within the Republican Party in Texas who are not huge fans. Texas is very similar to California, and that's a one-party state for the most part, besides a few of the cities like Austin, which are more blue. And so you end up getting like these flavors of Republican, right? And some of these Republicans are not super on board with Bitcoin still. They're like the Republicans of maybe 10 years ago, like Trump was, who weren't super interested. So I think there has to be like a little progress on that side. Matt's our local correspondent for Texas. I'm the fake reporter down here. But what do you got, Matt?
Historically, it seems like ERCOT's had a really positive relationship with miners. So I'm optimistic. And for the most part, it is a free market kind of grid pricing system here. Also, it seems like that in Texas, like you're trending towards more of a renewables heavy grid with like a strong build out of solar and already a lot of wind. And so that makes me think that demand response is also going to be on the rise in the future, at least the capacity to do so.
Yeah.
And as large flexible loads, miners are an excellent partnership there. So I'm not discouraged. I guess we'll just wait and see.
Matt's bullish on regulatory oversight. I'm just kidding.
Putting words in my mouth.
Okay.
Next story, please.
I know, Matt. I know. I'm just joking with you. Okay. The last thing on our docket today, this week's Cry Corner, coming to you from Ethereum land. from one Evan Van Ness. He says in this tweet, and I quote, Saylor hopes to raise $10 billion in 2025 to plow into Bitcoin. The annual Bitcoin mining selling pressure is about $16 billion. Even if Saylor manages to raise 10 figures next year, Bitcoin has to find another $6 billion just to keep the price flat after miners sell. ETH fundamentals inherently stronger. ETH fundamentals inherently stronger. I'm triggered.
You don't understand. You don't understand. So Evan is a friend, and I was texting him about this afterwards, and I was upset with him. He's also a Texan, so I was giving him some shade for being in the great state of Bitcoin mining and not respecting his constituents. But this tweet made no sense, like on the fundamental level. If MicroStrategy is buying $10 billion of Bitcoin, that's obviously hugely bullish. In terms of Bitcoin mining sells into the market, it's not that much. $16 billion for a $1.9 trillion asset is nothing. And then the day-to-day market volume of Bitcoin is into the billions of dollars. I don't have a number in front of me, but there's enough volume to hold this up. Colin, you pointed out that the Bitcoin ETFs had $3.1 billion in weekly inflows, and I don't know what date that was for that
last week alone.
Screenshot.
Like last week alone, there were $3.1 billion. And that is direct pressure on Bitcoin's price because these ETFs have to actually custody the coins underlying, right? So the idea that $6 billion in annual selling pressure is a lot for Bitcoin is laughable.
It's pretty funny, but we love Ethan, or we love Evan. We love you, Evan, but it was pretty dumb.
Guys, has the Saylor worship gotten to the point to where we're gonna let raising $10 billion to smash by Bitcoin a fundamental part of its investment case? Are we really gonna let? Come on.
No, I'm not saying that.
Bitcoin.
That's kind of the cornerstone of his argument, though, is he's baking into it. I'm not gonna defend Saylor smash buying $10 billion worth of Bitcoin with junk bonds.
The part of this tweet that makes it silly to me is the expectation that miners earning coins will sell all of their coins. Because miners are inherently bullish on Bitcoin, typically. Yep. Yes, they sell coins to service their dollar liabilities. Of course, right? They have also done this for the entire duration of Bitcoin's history, yet Bitcoin has somehow managed to still go up and receive flows. Crazy idea. Crazy. No, the question is always, the Bitcoin supply is preset, perfectly known. The demand side is always the question. There tends to be a really strong preference to hold coins among long-term holders, right? And that is the supply constraint. If there are new people coming in, if there's real long-term savings adoption, the price goes up. That's the story. That's the investment case.
Yeah, and I want to piggyback off of something that you said there, Matt. You were talking about, like, has Saylor worship gotten to the point that we're sitting here defending that? What I think is funny about Evan's tweet is that he said ETH's fundamentals are better, and he's talking about it from a purely price standpoint, right? From a purely financial standpoint in terms of price. Number one, that's not true because Ethereum is massively underperforming everything in this current bull market. But I think that's really interesting because what he's fundamentally criticizing is the financial component when the underlying mechanism that he's using to criticize it is the consensus mechanism that is used for all of the properties that make a blockchain worthwhile, censorship resistance, permissionless, things like that. And as we want to actually criticize the real fundamentals here, it's that, yeah, actually that sell pressure and the distributed nature of mining is much more robust than pools of capital that are concentrated in these like 1 or 2 or 3 Ethereum staking protocols that are much easier to capture than this global multi-hundred billion dollar mining industry with Bitcoin, right? So if we're actually looking at the real fundamentals here, those fundamentals are much stronger. It's going to be much more difficult, and I hope you're listening to this, Evan, for anyone to coordinate on a global scale to capture 51% of hash rate than it will be to go to like 2 or 3 staking protocols and seizing the funds that are locked in those staking protocols. Ethereum has lost the plot. It is no longer a serious blockchain project. It's just not. They're not trying to solve anything.
I love Colin's Crack Corners. We got to close out though. People have got to get back to Turkey Day. Colin, Matt, thanks for podcasting. We'll see you guys next week. If you enjoyed the show, go check out blockspace.media. You can subscribe to our newsletter and our other shows. And then, of course, you can find this on Spotify, Apple, YouTube, and elsewhere. Thank you to Karun and Compass Mining for joining the show. You can find them at compassmining.io. And yeah, we'll see you guys next week. Peace.